Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to today's top stock pick. I am Jeremy Mullen here with Andrew Rocco, who will follow me. But first, we will be looking at DoorDash. The stock is a Zacks ranked number one strong buy with the ticker symbol DASH. Pretty simple, DoorDash. So the company connects customers with local restaurants and retailers for quick delivery of meals and goods to their doorsteps. Stock is up 70% since last July, but with strong earnings and rising earnings estimates, 2025 could be even more appetizing for investors. So let's look at this company, see what it's all about. I got the profile page up here, as you can see, DoorDash, DASH. It's based in San Francisco, and their platform connects merchants and customers with Dashers. Those are the people who deliver your food. And now the company serves over 37 million monthly users worldwide. It's getting pretty big and it's become the leader in the space. So looking at the profile page, we have style scores of F in value, A in growth, and C in momentum. There's that Zacks rank number one strong buy. Now, a lot of investors will shy away from this value, especially those value investors. They're not going to buy this stock. And it'll also bring in short sellers who think the company is overvalued. So let's look at that. We have an 87 forward PE. That's pretty high. And we have a market cap of 70 to 71 billion. However, we're focused on the growth phase. So we need earnings to grow into that valuation. That helps the stock stay up. That helps the stock go up over the long term. So let's look at those earnings. Here we have the chart that shows the earnings beats and misses going all the way back to 2021. So rough IPO to start. The stock did going, but too many earnings misses. And the company just disappointed the street too many times, and it fell all the way down to $40. However, see how we started to turn things around here? 26 EPS beat, had a miss there, but a big 57% EPS beat here. We had a miss here, but the guidance was good and the stock went up. So some back and forth here, but we finally had this amazing quarter here with the 81% EPS beat. That's a 300% improvement from last year, with revenue up 25% to $2.7 billion. More importantly, DoorDash posted its first positive GAAP net income since going public. The quarter highlighted its focus on sustainable growth, as well as the aim to reinvest in services and innovation to support local merchants. Now, let's dig into what the analysts are thinking here. This is what really matters. Are these earnings estimates going up or down? If you look at the agreement for their estimate revisions, we see that since earnings, we have revisions all going to the upside. This is helping the numbers come way up, right? So for the last 90 days, we have a big jump from 19 to 33% for the current quarter. Next quarter, we have a 100% jump in expectations. The current year, this is what I'm talking about. We had negative earnings to positive earnings. That is great traction and momentum on earnings. That's going to help the valuation start to make sense. Next year, we have a $1.37 expectation that jumped to $1.94. That is a jump of over 40%. And with these estimates going higher, analysts have also been raising price targets, with most ranging from 160 to 190. So the stock's around 170 right now. So that's kind of right in the range. But we also have firms like Citigroup, JMP, RBC, and Truist that have set price targets above 200. And if earnings, again, meet expectations, beat expectations, this momentum should continue. So let's look at the charts, see how maybe we can get there. All right, this is a chart going back all the way to the spring. And what I have some moving averages. The green is a 21-day, 50-day moving average is the blue, and the 200-day is the red. Now, I also have some Fibonacci extensions drawn up here, and we find these extensions by drawing high to low. We had a 61.8 level that saw some resistance, but it broke. So then you start to target these extensions. 161.8 hit shortly after earnings. And we kind of just been trading around this level here, the 170, 180 level. It's kind of stuck right now around that 50-day moving average. So perhaps waiting for the next catalyst, which could be earnings this quarter. And if they beat expectations, I would expect this next extension to get hit. This price action is very strong, especially with the slumping market as of late. However, if the market does continue to come down, we could, of course, have a pullback. So you guys who maybe not want to buy it here, you want to wait for a level down on some sell-off, this is the zone you're buying it at. We have a retracement drawn from these lows to highs. That's the 130 to 142 area, let's say. 200-day moving averages is right there. So what might happen in some kind of severe market pullback is you get a dip into here, and then you target 200 down the road. Now let's look at the big picture. I really like this one because if you draw those IPO highs to lows, we are right at the 61.8 Fibonacci resistance. So what happens if this breaks higher? Let's say that 200 scenario pans out after earnings. You start looking longer term way up here. That's a big move. So the potential is really here for Dash. Not only are the fundamentals looking pretty good, but this chart's looking pretty good. The analysts are on board with price targets higher. I think this is a nice stock to be on. Even if the market pulls back, you really want to try to get a position in this name. Okay, that's it for me and DoorDash. Here is Andrew Rocco with his pick.
Thank you, Jeremy. And welcome, everyone. My name is Andrew Rocco. I'll be covering our next top stock pick for Monday, January 13th. In case you don't know me, I'm a stock strategist here at Zacks Investment Research. I also do manage the Tech Innovators portfolio. And actually, the stock we're discussing today is a part of that portfolio. So, and my personal portfolio. So let's jump into things here. So the stock that I picked for my top stock is a Zacks rank number 2 buy stock, Constellation Energy Corporation, ticker symbol CEG. And CEG is a leading American energy company that provides electricity, natural gas, and energy management services to businesses and institutions throughout the U.S. CEG is a significant producer of clean energy, particularly nuclear power, and they're also working to expand their renewable energy portfolio as far as solar and wind go. So they have a nice, diverse clean energy business. It's the lowest carbon emitter of any major investor-owned U.S. generator. And presently, its nuclear plants generate 60% of America's clean, zero carbon energy. And we're going to talk about why the U.S. currently needs a lot of energy and why it needs clean energy. So let's get into that segment of it. So as I'm sure a lot of you know, kind of what kicked off what I call the AI revolution, it's when ChatGPT became the fastest growing consumer app. And that really sparked the AI revolution by leveraging advanced architecture, making AI accessible really to the masses and everyday users through its freemium kind of business model where you can do ChatGPT for free, and then you can get a more premium model if you're a business or what I would call a power user. So ChatGPT really showed the market and Wall Street what AI had the potential of doing. And now these large cap tech stocks, they're spending a lot of their cash hoards on building out these databases or data centers, which will be needed for the AI revolution. So what is a data center? It's definitely not the overheating closet at the back of an office with 1 or 2 noisy servers. These are usually specially built, nondescript, large, massive, boxy buildings with row upon row of specialized machines storing, processing, and sending data to users. So currently there are 7.2 million data centers in the world, according to the German Statistic Office. This is only going to grow in the coming years. And you can see not only are data centers going to be important, how we power those data centers. And this is how it relates to CEG. So really every true market leader that I've studied in or invested had a long-term bullish catalyst, which propelled the stock higher. So data center energy demand is set to soar and grow by triple digits over the next few years, according to the IEA. And as if the added AI demand were not enough, crypto miners have been also putting a lot of pressure on our already overwhelmed electric grid. So I don't know if you guys recall, but in Texas, the the Texas energy segment was forced to pay Bitcoin miner Riot Platforms more than $30 million to limit its electricity use when there was a heat wave in Texas last year. So our electric grid is already overwhelmed. These AI data centers are going to add to the energy consumption that we need, and energy prices have already been increasing. So that's where CEG is really going to benefit. And this is not going to go away tomorrow, a month from now. This is a multi-year trend that we can look to latch on to. Now, let's talk about the different kinds of energy. There's natural gas and there's nuclear energy that can potentially power these data centers. And from a cost perspective, really, nuclear is going to be the most inexpensive. However, those costs for nuclear, it does have high startup costs. So those costs are front loaded. And a lot of these nuclear projects, they're having trouble getting off the ground because of the reputation of Fukushima, Chernobyl, these nuclear disasters that have kind of put a damper on the public's view of nuclear energy. And then there's regulation. Not a lot of nuclear energy has passed. Now, one thing I'll say about CEG, and the reason I really like this stock, is because it's institutional quality and it gives you these different avenues. So it does have that natural gas segment. It does have the nuclear energy segment. So you're coming at it from all angles. And regardless of which direction the market goes, you'll be able to take advantage of it with this stock. Now, let's go to nuclear. So one of the things that sparked CEG in September is they inked a deal to revive the 3 Mile Island, which was one of those nuclear disasters. To revive that plant, they signed a massive deal with Microsoft. So Microsoft is a minority investor, although they own about 49% of OpenAI, which was, of course, the company that came out with ChatGPT. So if you're going to have a deal with anyone in AI, this is probably the most sought after deal. And what Microsoft is going to do, it's going to pay CEG to provide this energy so Microsoft and OpenAI can continue to build out their massive data center operation, and they're going to get this relatively inexpensive energy from CEG. And I think as far as the regulations go, the incoming Trump administration is going to be a little bit more open to nuclear. Actually, the head of the energy agency that Trump picked, he comes from the nuclear energy, nuclear energy industry. So for me, it would be surprising if he wasn't pro-nuclear and trying to build out the nuclear space a bit more. Now, moving on to just last Friday morning, CEG, they acquired a Calpine Corporation for $16 billion to add scores of power generation assets across the U.S. and really take advantage of the nation's electricity demand forecast to surge. So the deal is really positive in a few aspects. So normally the company that is acquiring another company, especially a big acquisition like this, falls on the day of the acquisition. Instead, CEG stock gapped up 20% and ran throughout the day. So that was really the market telling you that they like this deal. And then from an earnings perspective, 20% of this EPS from Calpine is going, or 20% of the Calpine deal is going to be accretive to EPS right away. So I really like the price they got for this deal. It's a massive acquisition, but again, it's going to help CEG feed this insatiable hunger, what I call, from the AI industry for energy. Now, let's jump to those technicals that I was discussing. So this is what I would call an episodic pivot or a breakaway gap. You know, if you're watching a scary movie, this is when things take a turn. In this case, they're taking a turn for the better, of course. And we have this large base structure here. You can see I point out the volume at the bottom. We had massive volume on that Calpine deal. Today, the stock is pulling back, but all I see is it's kind of retesting this breakout zone. So it's giving us a low risk entry point. my Fibonacci targets from a technical perspective, I could see this stock at 330 in the coming months minimum. So that's kind of where my price target lies. But yeah, you always want to pay attention when a stock breaks out of a base like this, especially on massive turnover in a shaky market. So we do like to see that. And then CEG, they do have the rare combination of the Zacks rank 3 or better and the Zacks expected surprise prediction score positive. So when you have that combination, stocks produce positive EPS surprises about 70% of the time. So it's a good indicator. It tells us 70% of the time, and those stocks tend to return 28.3% on average. And these numbers are coming from a 10-year back test that we ran here in-house at Zacks. So we always want to have, beyond these bullish catalysts, we want to make sure that the indicators are aligning with our bull thesis, and we're certainly seeing that from the Zacks ESP score. We're putting all the pieces together fundamentally, technically, and for this stock, they do look bullish. And then finally, the stock has a bullish EPS surprise history. It surprised 3 of the past 4 quarters to the upside, and last quarter, it handily beat earnings estimates by 25.53%. I only see them beating these estimates more after inking these new deals, and the deal with Calpine, the deal for 3 Mile Island. So I do like the stock from both a technical and fundamental perspective. Once again, that's Constellation Energy, a Zacks rank number 2 buy stock, ticker symbol CEG. Thank you all so much for watching. If you guys want to take advantage, we do have a promo currently going on. So I would visit Zacks.com/promo. Once again, thanks so much for watching and have a great week, everyone.